It's possible to evaluate the health of a stock in just seconds if you understand some simple principles. What I'm going to do in this video is go through the Dow 30 stocks, provide my analysis of them, bullish, bearish, neutral, but also show you the basics of how to analyze any stock chart very quickly. Then I'll do my normal market analysis and we'll look at the trade of the week at the end of the video on a stock that had a good run on a relatively quiet Friday of trading. But let's begin with this look at the Dow 30 stocks and assess whether they are bullish, bearish, or neutral. Now, I want to say at the outset, this is my opinion. Do your own due diligence, all that kind of stuff. All right. So we're going to jump into my website, stockscores.com. And the first thing we're going to do is set our default chart. Now, everything I show you today in terms of the use of the website, Stockscores, is free to use. So you can do this yourself as well. The first thing I've done here is brought up a chart of Microsoft. And I've done this because I want to set the default chart time frame to a 3-year weekly chart, because we're going to do longer term analysis of the Dow 30 stocks. So I go to chart options and I change it from daily to weekly, and I'm going to set this to 3 years. So I'll go 3 and then years. And by doing this, I will establish the default chart as a 3-year weekly chart. All right, so now to look at the Dow 30, I'm going to go to the Charts tab. I'm going to go down to the Slideshow Chart Viewer, select it, and I'm going to view the Dow 30 sector. So I can just scroll down here to see Dow 30, and now I've got mini charts. I want to see the large chart, so I'm going to click on Large Chart right here, and now we can start to assess the charts. All right, so first one is Verizon. I would say that this chart is neutral to slightly optimistic or bullish. Here's how we assess that. First of all, we had a downward trend line over here, and that was broken. Right in here, the downward trend line was broken. That's the start of a bottoming process. We then had a break up from a rising bottom right there, which is actually a bullish signal, but so far nothing has really come of that. You would have expected the stock to move higher from there, and it hasn't. Instead, it went down, tested support, and bounced off of it. And now it's risen up to resistance and been stuck at it. So we have essentially sort of a sideways range for the stock over the last 6 or 8 months. Now this week, you can see it's breaking down a little bit, breaking this upward trend line. So it is, a little bit potential for some weakness in the short term, but the long-term picture has rising bottoms towards a flat top. So looking out maybe months, it may break to the upside. If instead it breaks this upward trend line and starts to work below that support, then you would want to be out of the stock. I don't think it's a great stock to hold. All right, so next one, I just hit the right arrow. Nike. This is a stock to avoid. The sellers are in control. We can say that because the tops are falling on the chart. There are no rising bottoms. So the sellers are in control. Until this downward trend line is broken, I would avoid this stock. Next one, Cisco has upward momentum. You can see that it broke the downward trend line here, broke up from a rising bottom right here. That was the time to buy. Recently, we had a pullback, which is quite normal and reasonable. We broke the pullback. Of course, the whole market broke down at that time. And now we are moving up. We are hitting these highs, which is going to be resistance. So it's quite likely that the stock will get stuck here, but the general outlook longer term is positive. And so I would say this is a bullish chart. You can see the sentiment stock score is 79, which is in the green. Next one, Coca-Cola, also a relatively healthy chart because you have rising bottoms. So that's the first thing that you want to assess. Who's in control? Buyers or sellers? Buyers, rising bottoms, sellers, falling tops. And in this case, it's the buyers. There is strong resistance here at $73. And so until we can break through 73, I don't know that I'd rush out to buy the stock. If you're in the stock, I think it's a decent hold. Again, a little bit of weakness this week, hasn't broken the cycle of rising bottoms, but that is a small concern that we should pay attention to in the weeks ahead. Next one, Merck, avoid. You can see that the tops are falling, the sellers are in control. Stay out of this stock until that downward trend line is broken. Walmart, good upward momentum, but perhaps starting to lose steam. It went into a parabolic trend, which is a curve. From a linear trend, it had a linear trend over here, broke that parabolic trend right there. That was a strong sell signal. And now it's building a falling top and starting to break down. Now it's not a bad chart yet, but I do think that the buyers are tired on this stock and not wanting to chase it higher. And so I would say it's neutral to slightly negative on Walmart. Next one. Disney has risen up to resistance. You can see it gets stuck here every time it gets to that price level. And so I would be a little concerned. A lot of volatility. That's an enormous amount of volatility for a stock like this. And it tells me that investors are quite uncertain. I think this is a stock that you buy on weakness, not on strength. In other words, buy it when it breaks a pullback like it did in these areas, but don't be chasing the stock up here. In fact, I think it's more likely to go lower than higher, even though it has a strong sentiment stock score. Doesn't mean it's a sell right now because it hasn't broken this upward trend line. But if it does start to break this upward trend line, then it might very well move down towards this floor again. NVIDIA, all right, good long-term trend, has had a lot of volatility over the last year. It really hasn't been a great stock over the last year. However, it's been a great stock over the last number of years because of the gains it's made. It has risen up to resistance where it's likely to get stuck, and therefore I would be worried that it's going to roll over and move lower again. Watch for this upward trend line to be broken. Now, the easiest way to watch for that trend line to be broken is go to a daily chart. So if I click on 6M, now I've got the daily interval, and I can see the upward trend there. And if we start to move down through this or start to build a falling top, then be a little bit concerned. Next one, Triple M, 3M, good upward momentum, choppy up here, underneath resistance. Buyers are in control, but probably more neutral than bullish. I'll start to go through these a little quicker. Chevron, I would say avoid. The sellers are in control, tops are falling. A little bit of a rally the last 2 weeks with strength in oil prices, but upside relatively limited, and therefore the risk-reward relationship doesn't make great sense. Johnson & Johnson, similar. It's stuck in a sideways range. Bad week this week, probably going to move down towards that 145 level of support. Next one, Procter & Gamble, not great. It started to build. It had rising bottoms for a long time. Now starting to build falling tops and testing this support. If it starts to break down through 155, I think it's more likely to move down towards 145 as the next stop of support. Boeing, very volatile, no trend. It makes it difficult to predict. A little bit of weakness the last 2 weeks, and I think more likely to go lower than higher in the short term. And just not a very predictable stock. So I think there's better places to put your capital. Apple, also quite volatile, but here it has rising bottoms, and so that's good. The problem is that's now been broken, and we've seen a falling top build. And so I think that it's, for now, a stock to avoid until it breaks this downward trend line. It could do that any time, of course, but until it does, I think I would avoid Apple. And next one, Amazon. Upward trend was broken. You can see the rising bottoms here, broken in there, coming up, but potentially building a falling top. So it's slightly bullish because the momentum is still up, but this volatility lately shows uncertainty. And I think limited upside, downside to here, it just doesn't have a great risk-reward trade-off. Your upside is this much, your downside is this much, doesn't make great sense. Honeywell, choppy, sideways trading, therefore not really good upward momentum. That's choppiness shows uncertainty. I think it's best avoided. Salesforce, similar situation. It's been sideways for a while, choppy, building falling tops in the last few months, a little bit worrisome. Good upward momentum on this one, TRV. I think this is a good hold if you're in it because it has that upward momentum. You might consider buying it on a pullback to this trend line and then a bounce off of the trend line. And then as long as it doesn't break the trend line, it remains a hold. Similar here, we've got a good upward trend. You know, we had the volatility around tariffs and that sort of thing in there. We've sort of come back into the trend. This is an upward sloping channel. You want to be a buyer at the bottom of the channel and then expect it to get stuck at the top of the channel. It's a good hold and okay to consider as a buy here because of its upward momentum. IBM, very similar, but probably a little extended right now. There's your upward trend line. Here's your upward channel. You're at the top of the channel. So I would buy this on weakness, pull back to the trend line, bounce off of the trend line. That would be the time to consider it, not in the at the top of the range here. McDonald's, you can see rising bottoms were broken this week, and that's a negative. And so I would put a sell recommendation on this. Not considerable downside, but also not considerable upside. I think it's more likely to move lower than higher. Maybe not next week because it's probably a little oversold this week, but in the weeks ahead, I think the stock looks like it's struggling a little bit. Amgen, sideways, difficult to predict. It's probably a neutral chart, but not particularly interesting on the buy side or the shorting side. American Express, here you had a great upward trend, broken here, now building a falling top. If it rolls over and starts to break this upward trend line, I would say it's bearish. If it can rebound and come back to the highs, then it remains a hold, but upside limited because of this resistance. So in the months ahead, there's this much upside, but this much downside if things don't go well. And so the reward for risk doesn't make great sense. United Health, ooh, ugly. You can see a big breakdown the last little while, falling tops, downward trending market. Best avoided until it can start to build rising bottoms. Sherwin-Williams, rising bottom cycle broken, now building a falling top, somewhat negative. I would worry that if it breaks this floor, it could get weaker, so be careful with this stock. Visa, good hold. I think a little bit extended right now. I would be more interested to be a buyer if it comes back to the trend line, somewhere around the 320 level. A lot of volatility lately shows investor uncertainty, but great upward momentum. And so it's at least a hold and perhaps a buy on weakness. Home Depot broke the upward trend line, built a falling top. So that was kind of the end of the strength that had been in place since late 2023. Continues to build falling tops. I would say it's a stock that is more bearish than neutral. Almost done. Here's Caterpillar, also has broken its upward trend. That means upside limited to here, and it could roll over and test this floor here, and so the risk reward doesn't make great sense. Microsoft, reaching to new highs. That's one of the few tech stocks that's able to do that right now. It probably is a little overbought in the short term. I would consider this on weakness. If it can pull back a little bit and then break a pullback, I would say it's a stock to consider for a buy if you like the company. If you're in it, good hold. And finally, Goldman Sachs, long upward trend, broken here. That establishes this is resistance. When you have an upward trend and you break it, that makes the highs resistance. We're coming up to those highs again. Expect the stock to get stuck there, so limited upside, but it could roll over and test the lows here, so downside is significant. I think it's a good hold if you are in it. I don't think it's a good buy here because of the risk-reward trade-off, and if something goes wrong, you could really test those lows, which is a lot more downside than upside. All right, so that is a quick rundown of the Dow 30 and some important lessons there about rising bottoms, falling tops, where resistance is, where support is, price volatility as an indication of uncertainty. Make sure you go back and watch through that again because I say kind of the same things over and over again, and you'll find that if you understand those concepts, you can start to evaluate any stock on any time frame. We did the 3-year weekly, but at the end of this video, I'm going to evaluate a day trade from Friday using those same principles, and you can apply those concepts to any chart time frame of any asset really that you can get a chart on. All right, so let's now get into the analysis of the overall markets, and we'll start as always with the S&P 500. So I'm just going to punch in here SPY, and you can see much like many of the charts we looked at, it had a good upward trend, broke the upward trend on tariff concerns. That establishes this as resistance. We're moving up into that resistance, probably going to get stuck there. I think more downside than upside here, but it's still, relatively bullish long term, but kind of volatile and uncertain in the shorter term. Moving along to the NASDAQ 100, QQQ is the symbol, and there you have resistance here as well. Broke the upward trend line, have rallied back, probably going to get stuck, more downside than upside, and so somewhat deserving of caution. On to small caps, which are much more interest rate sensitive, and we can see that they have rebounded nicely, just breaking that downward trend line, but a lot of volatility, which shows a lot of uncertainty. So in general, I don't like the small cap stocks, but some of the best trades are coming from the small cap group. So while I wouldn't generally buy the index, I would certainly play some of the individual stocks that have the characteristics of alpha that we look for, the ability for these stocks to make dramatic moves beyond what the market return is. TSX 60, Canadian market here, good upward momentum, maybe a little bit risky given the downside to support, which is way down here. But clear of the highs, unlike the other indexes, it's been held up by commodities, most notably gold, which has obviously done great. I think it's a hold. I think it's a little bit risky given the parabolic run. Typically when price goes parabolic, you usually get price coming back to the trend line, either by coming down or by just going sideways for a while until it gets to the trend line. So gold is a good hold, but chasing it here I think is risky. Maybe on weakness it's worth considering. How about oil? USO is the symbol for oil, and here you have the big jump with tensions in the Middle East, but now coming up to resistance. And you recall, a number of weeks ago I said that gold or oil was at support and likely to bounce. Well, the bounce was in much more significantly than maybe anyone expected. But that, of course, is the tension of war in Middle East. And so you see now at this resistance zone that it's hit 5 times. And so it's likely to reverse off of that unless there's a real escalation in what's happening in Iran and Israel. All right. How about, let's take a look at currencies. US dollar, pretty bearish, but at support. And so it should bounce off of this, kind of like oil fell to support, a place where it should bounce. If we look at Bitcoin, GBTC, a little bit wishy-washy the last 3 or 4 weeks. The long-term momentum is still up. But if we go to the short-term chart, you can see that it's starting to build some falling tops, which is a bit of a concern short-term. If it starts to move down through that floor, then we could see more of a pullback in Bitcoin. And finally, the chart of TLT, which is our bond market chart, it's still in the grip of the sellers. So the bond market's still negative, which means interest rates in the US remain elevated. And if we start to break through this floor, that implies higher interest rates ahead. But if we can break this downward trend line, then we have the potential for lower interest rates. So my ratings then, neutral on both time frames for all of the US stock markets. Canadian stocks, short-term neutral, long-term bullish. The same for gold. Oil, short-term bullish, good upward momentum, but long-term neutral because it is hitting that resistance. The US dollar, short-term bearish, but because it's at support, I've put a neutral rating on it long-term. And then Bitcoin, neutral, short-term, long-term bullish, and bonds, neutral on both time frames. All right, now let's get into the trade of the week. This is an example of a stock that was trading abnormally on Friday. We apply our indicators at Stockscores to look for these kinds of stocks. Every day there's stocks that make these big gains. And it all starts with abnormal activity. And that's what I've created some special indicators to do. And in this case, I want to show you how those indicators apply in multiple time frames. So this is the 13-minute chart. And this is our first hint that something was going on in this stock, CTOR, because it made an action candle. You see there that pink and yellow dot that I've circled? That is an action candle. And when you get action candles that break through resistance from optimism, from low volatility, that implies the stock has a very good chance of going higher. So that was the first reason I was watching CTOR. Then we had a subsequent break, very similar on the 1-minute chart. So now you'll see I'm at the 1-minute time frame. And here again, you see those action candles breaking through resistance from optimism, from low volatility. And so that was a pretty good time to be a buyer. But you can even shorten the time frame more to look for a confirming signal on something like the 10-second time frame. So this is now when we saw that break on the 1-minute, and here again you see all those action candles firing. That's caused by strong buying, and the message there is that the buyers have found a reason to be excited about the stock. I love to buy the pullbacks after that happens. So we had a pullback. You see there a blue dot. That's another one of my indicators. And all of these indicators are available to my active trader members of Stockscores. You can learn more about that at the website. So we had the what's called the wave up indicator firing right there. And that was the start of a really nice run from $2.34 up to $3.40 through the afternoon on Friday on what was a pretty slow trading day given the fact that it was sandwiched between the weekend and a holiday. But still, even on a slow day, we can get these stocks that make big moves, all starting with abnormal activity, which is what those action candle indicators are all about. love to hear your thoughts on where the market is going, given the analysis that I've shown you. What do you think? Is the market headed lower or higher in the weeks and months ahead? Plus, if you are not already subscribed to the channel, do me a favor and hit that subscribe button. Like the video if you enjoyed it. And most importantly, trade well.